What's up, guys? Today's video is just going to be 2 live executions and a recap of the second trade because I did have to leave. So stay tuned. This video has insane value. It explains how to read the market, explains what you should be looking for when trading. It's November 10, Monday, and enjoy the video, guys. Appreciate you all for watching.
Alright, I hope everyone can hear me. Okay, so I just took this trade. It is a short on QQQ. So you can see right here in the bigger picture, there's a little more room to go on London lows. Over here, SPY already took London low. So right now, pretty much the retail traders, they're going to think that this is a SMT. And they will be going long on this fair value gap, hoping to get a low-hanging fruit right here and then rip back up to highs. But we know right now that we're testing back in. We got a huge run to the downside right now. We have a huge gap right here. So there's a lot of imbalance there. That's where the smart money wants to go. They want to go where the big money is. So, we're in shorts. Let's see how this goes. This is supposed to get inversed. So let's make this red. Let's make the opacity a little low. It's about a 1.3 to 1 trade right here. If the first take profit hits, I don't know, I forget how many contracts I entered, but I'm going to exit more than half over here. And then the rest I'm just going to try to ride it till down here. Till down here, sorry, from the S&P. Alright, let's see how this plays. 5-minute looks. Bearish still. The bigger picture discount is right above my stop loss. It's okay. If the stop were to hit, then that means it's going to go into discount over here. And then I'm going to wait for some more 1-minute structure to get into a short again. Right now, smart money knows that retail traders have their take profits placed right here. So, they're not going to hit that. Right here, more retail traders are going to enter if this were to inverse. Then that's where we're going to make our move down, if not already. Alright, chat. Let's take some push-ups, y'all. Alright, we just gotta put 40 push-ups in. Okay, so let's see what's happening. Sorry. Yo, chat, should I take Retta? Should I take Retta, chat? Trying to get shredded, dog. This cut's hard.
So this fair value gap actually held so far. I'm not sure if that was just smart money trying to trick retail, because as you guys know, ICT trading has been out for a while now. It's obviously getting more popular with all these new traders. I guess utilizing it. It doesn't, just because it exists, it doesn't mean it's perfect. It works perfectly. It's definitely flawed. Every single trading strategy is flawed. Not everything is 100% win rate. But just like every other trading strategy, retail ends up figuring it out, and they obviously give it a shot. Like, there's that 16-year-old boy right now. It's 11:20 a.m. on a Monday. He's in his English class and he's on his Webull with TradingView on his phone, trying to enter into calls right here. You see a break of structure. Not everyone looks at the bigger picture. Not everyone has. Just knowing the strategy isn't enough. You got to have crazy experience in the market in order to know how it moves, obviously. I've been in the market since 2025 right now. I've been in the market for about 5 years right now. I've been doing ICT for about two and a half. I think actually two. Um, yeah. So, but the way, like, you could change your trading strategy. You could trade a trend line if you want to. You just have to remember how S&P 500, how QQQ, how they move, and how they align with each other. Like right now, I know that S&P took London lows, QQQ didn't. That shouldn't be an SMT, because generally when one of them take a significant low like that, you want to ride that position until the other stock hits also sweeps the low. If it's like a major point, like London low, Asian low, previous day low. But if it's just like an area of support or resistance, then it doesn't have, not both indexes don't have to hit it. Like I don't want to look for an example right now. I don't want to mess up my charts, but you can definitely find one. But anyways, as I was saying, you could use any strategy. You could trade trend lines if you want. Like, for example, someone who knew that we were still in a bearish trend based off how they remember the markets moving back then, like from all your history, you would know that when we had a crazy gap up in pre-market. Crazy gap up last night, this morning, early morning pre-market. And then as the day started, we were chopping a little, and then we flew down by like $4 or $5. That should tell you that A, there's a lot more room to go, and B, you're supposed to be looking for entries. And also, if you were watching it as it was going down, you can notice there's literally no entries throughout here. So as I was moving down, everyone was having FOMO, trying to enter, and nobody could enter, because unless you're using like a trend line strategy, or for me, for example, I was trading ICT, or like I guess you could call it ICT. I couldn't find an entry. There may be some kid who goes on the 1 minute and sees, like, I don't know, sees a fair value gap and just uses it even though it's not in discount or it's not inverse or whatever it is. Like, for example, some people would just enter right here. As soon as this one got inverse, they would enter right there. It could work, but where is your stop going to be, and where's your take profit going to be? If you entered right there, let's say you entered short, because right here we have the break of structure. If you entered short right here, which was not in discount, mind you, it was not in discount. What was it right here? This is discount, or equilibrium, sorry. You would want to enter right here, which is where I had my fair value gap, and I didn't get an entry there. You shouldn't, if you entered anywhere but there, then that generally means you did not follow your trading plan, unless you're just trading for scalping, which if you were scalping, then you would like take profits right here. But if you were taking profit right here and you entered right there, where would your stop loss be? Like, you can't, it doesn't make sense to put a stop loss here, put a stop loss here. You should put a stop loss right there, right there. And you gotta be dumb, you gotta be like legit an idiot to enter a trade right here, shorts, put your stop loss all the way up there, and a take profit like right here. That's a 0.28 to 1. That's like, that's dumb. Alright? And before you say, nah bro, I would have wrote it all the way down to these lows right here. Look, yo, there's equal lows. A, that's not equal lows, and B, you wouldn't have, because there's no conviction there. Like you're entering off of inverse fair value gap at the low of market open, pretty much. So, like, nobody does that. You gotta, if you want to succeed in trading, you gotta take 100%, or you gotta take high quality setups. You know what I'm saying, chat? You gotta take the high quality setups, because at least when you take it, you know that it should have worked. Not that you should have known better. You gotta, every time you take a trade, if it loses, you gotta know that, okay, it should have worked, but it didn't. You know why it didn't work? Because not every strategy is 100%. But if you take a stupid trade and it doesn't work out, then that's on you. You're gonna be telling yourself, oh, I'm so stupid, I shouldn't have taken that trade, I didn't follow my rules. Then you go at nighttime, you watch, I don't know who you watch, TJR, you watch his videos on trading strategies, and you watch some discipline videos. That doesn't work. I've been through that. I've done that before. It doesn't work. You just got to take A+ trades. And if you miss, like for example right here, I was okay with missing my entry. Like, I was watching it. I was watching the trade this whole time. I couldn't get an entry. I was like, okay, I'm not getting an entry. I'm not entering. And then I saw we took the lows on the QQ, on the SPY, on the S&P 500. We didn't take the lows on triple Q. We had discount, we had a equilibrium right here. This fair value gap was touching the equilibrium, so that's my strategy. I like entering on only on fair value gaps that hit equilibrium. Okay. This is on the S&P, so you could even enter on the S&P, but I didn't want to because like I would have felt dumb if I'm playing like I would be waiting for QQQ to hit London lows to take profit on my trade. So you could technically enter on the S&P just because it's moving. It's just because it's more bearish than the QQQ, but it's not the smartest thing to do because technically it could be just chopping while QQQ goes for the low. Which I don't think will happen because there's so much more to go. Like we still got another $2. Let me just show my trade on QQQ. What made me take it again? Right here was this. Right here was the swing high. Right here was the low of the day. We chased back into discount. Retraced back into discount. Hit that fair value gap. I entered. Like I got filled right here about. Stop loss was at the swing high because again that's what I based my trade off of. I ideally wanted to base it off of this area from here down to there, with the discount being right there, equilibrium being right there. That's what I wanted to enter off of. But I saw we had another entry here, so I was like, it's not ideal. It still goes with my plan. I'm gonna take it. Okay. And right here we could see trendline traders. We're gonna watch right now. You know what? We're gonna watch right now how people that trade with trend lines make money. Let's see. Let's move this. Let's clean up the charts a bit. This SMT, we all know that's there. Let's clean it up. Guys, you gotta make sure your charts are a little clean. Let me take off. Because if your charts aren't clean, you're not gonna be able to see. Like even this, I want to take off, but I'm just gonna leave it on for the video. Let's extend this a little. Let's see how S&P is doing. S&P is honestly moving beautifully right now. Again, people who trade in trend lines. See, right now we're in discount. We touched discount. We're in a downtrend for the short term. Easily can hit lows again, easily. Again, I don't like using trend lines. I just like adding it as conviction. Don't be scared to add those patterns and stuff like that to make you have a little stronger of a conviction. Don't believe those people that make fun of trend line traders, bearish flag. It's BS if you're trading a bearish flag like this. Like, oh, it moved down. Here's a bearish flag because it moved up a little bit. Ooh, ooh. Okay, just cracked the bearish flag. Let's enter. While it may have worked here, that's not how you trade it. Okay, and also using all these things make you realize how smart money tricks and fakes out all these retail traders. Like right there, some stupid retail trader drew a trend line and saw a move up, and they would have entered with FOMO. They say, "Oh, it's a trend line breakout. We're at lows. We're gonna go back to the highs. We have a resistance or whatever the hell you call it right here." There's there's a bunch of levels to the game, and after I've been trading for like 5 years already. After trading for 5 years, I don't know, like most of it. I know probably like 50%. There's people out there that know a lot more, and those people are trading with millions, making 50, 60K a day. But then again, they lose. Everyone loses. You can stay profitable, but everyone takes losses. That's part of the game. Let me move this trend line just because it's making it a little dirty. I'll leave it on S&P. But yeah, this is how I used to trade back in the days. Like 2021, I would see some support right here. I would mark it up. Let's say this white line, I marked it, and then I would draw a trend line. Oh, it's a bullish flag on support. We're having a trend line breakout right now. Once this candle closes, I'm going to enter calls. That's how I used to trade. I didn't have a plan. Let's say I entered longs right here. I didn't have a stop loss or anything. I probably would have rode it until I was like 90% done with the trade, like 90% loss. I legit, oh my god, those were the days. I lost so much back then. Okay, so let's say my stop loss would have been right here back in the days. Let's say, oh, you know what I would do if it broke support? That's what I would do. That's what everyone would do. Don't lie. I would I would say once if it closes under the support line, that means the trade is done, invalidated. So let's just say for the video's sake, it's right here. And then my take profit, I will try to find the place of resistance, which looks like right here. So let's say all the way up there. And bro, just look. Does it look like it's this stock is about to go just rebound by like $2 to the upside at today's low? Do you serious? Like it's right now we're chopping around today's low. Do you think it's just gonna bounce up $2 after falling down like $2-3? No. You guys have to learn how the market moves a little, guys. The market moves up and down into discount and equilibrium, and into discount and premium and discount, depending on if you're playing longs or short. There's the stock. You don't base movement off of support and resistance. The only lines you should be having are liquidity lines. The only horizontal lines, horizontal arrays, the only things that you draw should be liquidity pools. I like to start off my day by, let me just switch to stock because I don't want to mess up my chart. But I like to start off the day by marking down. So I start off on the 4-hour, look at the previous day low and previous day high. So yes, last trading day was Friday. Right here is Friday's low and Friday's high. Okay, let me move it up. Now, drop back down to the 5. I started doing this around like 9:30. I don't like trading second market opens, and you shouldn't, because that's the definition of gambling. You know what? It's better than sports betting. I gotta admit that. Save your sports betting money and just pick your side, calls or puts, for 9:30, and just place the order instead of putting it into sports betting, because that's dumb. Sports betting is complete gambling. It's stupid, and the odds are against you. Okay, Monday I like marking London high and London low. Alrighty, so we can see today in pre-market it pretty much took down all the low levels. So let's take that off. Alright, so all we got left is London high and previous day low. Yep. Okay, so what I would be doing is waiting till around here to start actually trading. Again, I wouldn't trade the stock. I wouldn't trade IONQ. I just have it maybe as an investment or something. But I'm just using that as an example, pretending this is QQQ or something. So let's say this is the NASDAQ. I would wait to trade until I see it sweeping either London highs or previous day lows or New York PM low, one of these, just like one of these liquidity pools. I'm not waiting for it to hit support or resistance, a place where I see it goes up and then it crashes back down, it goes up and then it hits back down, and then it goes over the resistance right here, closes, and then it goes back, and then it uses the resistance as support now and goes up. That's just a coincidence, because when you find a bad example, you don't use it. That's not how the market moves. The market doesn't move on support and resistance. I can guarantee you walk into a hedge fund right now, you see one of them trading NASDAQ, they don't have support and resistance lines. Guys. They have maybe the news open, maybe forex factory, maybe they have I don't know, some other news outlet, and then they have a chart open displaying most likely the S&P, the NASDAQ, Dow Jones, probably gold, oil, and maybe Tesla and Nvidia. They have a bunch of stocks open to find the way the market's moving, which direction the market is going. If they see the S&P and the NASDAQ and Nvidia are all moving down hard, and then you see Tesla's moving up, you want to keep your eyes on Tesla. You want to keep your eyes on Tesla to see if it can move down with the market. That you gotta take a look at the whole market and all the liquidity pools and where the market's going to drag to. Technically, looking at three stocks that are all supposed to be moving in the same direction. Let's use S&P, triple Qs, and Nvidia. They all should be kind of moving in the same direction. I know S&P is not for tech stocks, but maybe some. I don't think so. But overall, 9.9 times out of 10, S&P is going to move together with the QQQ. So you want to see if S&P is moving down, triple Qs are moving down, Nvidia is moving down, and then you look at Tesla, you see it moving down, and then AMD is chopping, or AMD is moving up, right? So you keep your eyes on AMD, and AMD is generally on, 1 second, let's see, okay, so take profit 1 just hit, sorry guys, so I took 5 contracts, let me sell 3 here. But yeah, there you can see, guys, by the way, let me just bring that back. This is literally the definition of smart money. We can see right here that retail traders would have entered right there longs, bullish breakout, whatever the hell you want to call it. Smart money enters short, or they've been in shorts since here. And then they fake them out. They fake them out, think they're going up, and now they're moving back down and down and down. This is how they gather more liquidity, guys. That pushes the trade. Liquidity pushes the trade. It's not just the hedge funds and the banks moving the market. They use you to move the market. And no, I'm not saying you gotta trade like the banks to make money. You gotta trade smart. You gotta think, what is someone else doing, and what could happen here. Like, not obviously, if you look at anything, you could think anything. Like, you're looking at this trend line, you could think it's gonna break out, or you could think it's a fake out. So you gotta think what the majority of people are gonna be doing. Right here, you see breaking out. There's a quote-unquote support line right here. Support line with bunny ears. You could see there's a support line. Trend line break, bullish flag, whatever the hell you want to call it. Alright, I just got filled for the 3 that I placed. I have 2 left, guys. I'm going to let that ride till here. Sorry for stopping the lesson, chat. Let me just put stops at break even. Alrighty. Give me 1 second, guys. I'm just moving my stop loss. What's my average? 231. Let's make it 235. Stop 235. 25. Alright, boys. Let's get a W in the comments for that trade. Alright. So, what was I saying? Correct. Okay. Bro, you guys should be paying me for this lesson, dog. Okay. So we had this fake support. You can call it support. That's what retail calls it. Have the support line. Have a trend line. Bullish flag. Break out of the bullish flag. Let me move this crap. Break out of the bullish flag. And now, 1. You could think right now that the stock is going to break out. Right? Let me take out my drawing tool. Oh, the fuck? You could think it's going to break out right now. Alright, we had this confirmation right here. Bro, where's the drawing? Oh my god. Okay. Could think this is the breakout. This is the confirmation right there. Confirmation, right? Right, guys? Confirmation. No. That's a fake out. Because again, the market, pre-market, was up in London session, chopping around, pre-market, and then market open, boom, goes up, takes London highs. Remember what I said. That's one of the points I mark as liquidity. London high. Takes London high, chops around, boom, dumps like a freaking maniac. No entries were taken here for me because I couldn't get an entry. I wanted to enter right there. It did not hit a fair value gap that was in equilibrium. I was waiting. Got a little upset, not gonna lie. But time is key. Patience. P-A-Y-T-I-E-N-C-E. Patience. Bro, I was looking at this chart from 10:30 until I took an entry, it was 1050. I don't like looking at the charts for a lot. It really F's with your head. I don't like looking. I was taking a dump, dog. I was taking a dump. I was looking at the charts, and then I noticed I kept on using this as my discount zone. Kept on using this. I was like, I want it to be. You know, I was looking at triple Qs, guys. I was looking at triple Qs, but I'm just using this because I don't want to mess up my triple Q chart right now. You know what? F it. Let's do it. The trade's already pretty much done. Ideally, honestly, I like looking at the 5-minute. I knew this was the structure that we had. This was the structure that we had to break. So I saw we kept on going high. We kept on making SMTs. I was like, okay, maybe we're gonna use the SMT and break this structure and then fly down, which we did. I mean, we didn't use an SMT actually. That's all the SMTs broke. We see like right here, right here, right here. It ended up lining up with S&P, as you can see literally right here. So right here is the structure. I would drop down to the 1-minute because it wasn't so clear here. It was like a little choppy. When it's choppy, you could drop down to the 1. Drop down to the 1. We saw the break of structure. From here, I was looking to enter a trade. I was itching, fiending for a trade right here. Me 2 years ago, I would have seen this break of structure. Boom, boom, right here I would have entered because it's a fair value gap. But me now, I know that if I entered that crap, let's go to replay. If I entered that crap, dog, right here you see break of structure, next candle, next candle. Alright, fair value gap right here. Let me just quickly draw it out. Bro, I gotta go to work. Okay, fair value gap, we hit it. I would have entered a short. I'm not gonna enter on replay because that's gay, but I would have entered a short right here. Where would I have put my stop loss? Where would I have put my stop loss? Here, which is technically a liquidity pool, but I wouldn't put it up there because that's retarded. Well, let's say I put it right here, okay? And then where would my take profit be, guys? I would technically my first take profit would have been New York AM low if I was able to get an entry like right there. Ideally, I wanted this. I wanted the breakout to stop right here, and then I wanted it to go back up into discount. So from there, I wanted it to stop right there. I wanted to enter right there, at this order block, breaker, inverse fair value gap, regular fair value gap. This was a lot, but we didn't hit it. So ideally, I would have entered there and stop loss right there, and then take profit would have been all there. That's like 2 to 1. But we didn't get that, as I was saying. So I was waiting for a good trade, something like that, something that I wouldn't be losing so much. I wouldn't have so much risk on the table. Okay. So let's say I entered right there, and let's say I put my stop loss right there, which is dumb. Do not do this. I wouldn't put my take profit there. Who the hell? No one's gonna go from 619.30 to 618.50 and be happy with that. That's like 50 bucks. I would probably put my stop loss right here. I would probably put my take profit right here. That's where the average person would. And let's see the risk to reward. That's still a 0.58 to 1. You should never take a trade like this. Never, ever, ever. Because why? You're gonna be thinking the whole time like what the hell am I trading? You know, like why am I risking all of this to make, let's say you put 500 at risk here, to make 200 bucks. Like who does that? That's dumb because it's not even guaranteed, you know? It's not guaranteed. Nothing's guaranteed. Even though we know it went down more, it's not that doesn't always happen. Today is just very bearish at this time. So you go down, next candle, next candle, next candle, next candle, next candle, next candle, boom, take profit hit. Oh, I'm the best trader. Yeah? Alright, so that's it. You just took a trade that was 0.5 to 1, okay? You just took a trade that was 0.5 to 1. Exited the trade, you're out, you're done for the day. Then you keep looking at the charts, obviously, because you're a maniac like me. Keep looking at the charts. Okay. Oh, I should have entered. I should have held it. No, I should have held it. Oh, you know what? Actually, we're good now. It's going up. Oh, thank God. I'm such a good trader. Oh, no. Oh, yeah, okay. I'm a good... Oh, no. Oh, I should have held it. You see, I knew I should have held it. This was such a good trade. This was such a good trade. Oh, my goodness. Should I enter more? Should I enter more? Oh, it already took the freaking zone. It already took the liquidity. Oh, okay, this trade's done. See, that's how stupid people think. You know how much that FOMO would have effed up your head. The next day when you went into trading on Tuesday. Let's say you were disciplined and you didn't trade for the rest of Monday, and you held your stuff. You didn't trade anything until Tuesday. Going into Tuesday, your mind is gonna think right now, I'm the best trader in the world. I could have made 1,000, instead I only made 250, and I also could have lost 500. But you forget about the loss. You don't think about that because you just profited. So the next time when you go into trading, you're just gonna keep thinking about how much money you can make, and you're not gonna calculate your loss. You're gonna say, oh yeah, I'll put my tick profit, whatever. I'll put my stop loss, whatever. I'll do another 0.5 to 1. No, that's dumb. That's dumb because if you lose one trade, it takes you 2 trades to make it back. If you lose 10 trades, it takes you 20 trades to make it back, and that's to break even. You want to profit. You don't want to break even. There's no point in trading if you're just breaking even. Feel me? Alright. Enough yapping. Let's see what we're up to. Bro, we're chopping like crazy, dog. What the hell's going on? Let's check out the 5. 5 minute looks like we're still going to crash. Even though we did... See, I thought we were going to take out the S&T and fall down, because usually when you take out an S&T, the market moves a lot. Like, it like dips hard. I was thinking we took out the S&T and legit went straight for 616. Maybe didn't have enough liquidity to push it, which does make sense because we were chopping heavy here. I guess let's just hold it out. Let's play it out a little. I gotta head out in 20, so I'm gonna leave this up for a little bit longer. My stop is at break even for the last 2 contracts that I have. I took an options trade on this one, but not 0 days to expiration. Don't do that, guys. 0 days to expiration. F with your emotions. There's another thing let's talk about. 0 days to expiration. Do you guys realize that if you put in like 5K to your Robinhood or Webull or TD Ameritrade, whatever the hell you want to use, you put 5 bands, just trade like 2 or 3 or 4, let's say 4 if you're high, if you like doing high risk. If you have more than like 50 bands to your name and you put 5 bands in your account, put in like 1,000 in each trade, like 1,000 to 1,500 in each trade. Okay. Let's say you enter with 1,500. So now you can either get like 10 contracts of 0 days to expiration for like 150 a pop. But once they get, if you see right now we're getting chopped up, bro. This past 40 minutes we've moved $1, like $1.30. And what happens when you get chopped? When you get chopped out, when you're playing in chop, your option decays like crazy if you're trading at 0 day to expiration. So the whole time your mind is going to be effing with you. You're going to think, oh damn, I gotta sell this crap already. As soon as I get back to lows, I'm gonna sell it because I don't want it to decay anymore. Look, at this low right here. Whenever my first take profit hit, I made the contracts were at, let's say, 250, and then now it's gonna hit that low again, and it's gonna be like 230 or 220. That's decay. So if you trade like 1 day out or 2 days out, 3 days out, then whenever it hits that again, it's gonna be pretty much the same thing. It's the same thing as trading futures, but you don't need to have so much capital. Okay, I got stopped at break even. See, this is the definition of decay. If you were trading a 0 day to expiration, dog, you really got stopped out like right there. I got stopped out, not at break even. I still made, I entered at 231 a contract. I put my stop loss at 235. So I still made like 4 a contract on the remaining 2, which is whatever. It's nothing, but at least I didn't lose. I still think it's gonna go down, but I'm not entering a trade again just because we are chopping a lot and it's about to be lunchtime. That was a good solid trade. Again, let's just review it real quick. I'm gonna move this. Actually, let me put that back. Alrighty. Okay, recap. Swept London highs, chopping around, flew down. A lot of displacement to the downside. A lot of volumes, bearish volume spikes. We had discount I mean, we were trying to reach into discount, never did it, never did it, never did it, never did it. Didn't do it again, still didn't do it. We created a new swing high right there, and then we created a new swing low right here. So till then, I didn't use this just because I didn't like it so much. I didn't like it because we didn't sweep this liquidity yet. We didn't break structure yet. I didn't really like this swing high, so I just figured I may as well use the swing high before it. So till this swing high and this swing low was created, I was using from there till, I guess you can say, here, or yeah, I was looking for a retrace into there till I entered, for me to enter. So that didn't happen. So I saw this swing high and that swing low. So let's go from there to this swing low. Let's extend it a little. Alright. Perfect. Beautiful. Okay. Let's put replay. You know what? Let me just, okay, let me put it there. Let me clear my chart out for you guys. Let me remove this. Remove this. Okay. We got London lows to sweep still. Remove all the drawings from this one. We got London lows to sweep still. These are both on the 1 minute chart, so we're gonna look at it. We're gonna look at S&P and QQQ together. Right here, the S&P is about to hit London lows, as you can see right there. Let's fast forward 2 candles to where S&P hits London low. Okay, so right there is a swing low that was created. So I drew the discount thing right there. Alright, so right here, you can say it swept low. There's still a SMT. Let's see, let me just double check this. Okay. Right here, London low was swept on S&P, but not on triple Q. Okay? That's an SMT, guys. I mean, that's not an SMT, sorry. That's what people would have thought it was an SMT, and therefore it's gonna maybe break out a little, go to the upside, and you're gonna be looking for a short entry to smash the SMT. Because again, as I mentioned earlier, an SMT generally doesn't work for like London high, London low, previous day high, previous day low. From my experience, it generally works. My bad. It generally doesn't work for London high, London low, Asia high, Asia low. It usually works for previous day high or previous day low, or just like equal highs or equal lows, like it would have worked here. So okay, let's go. So we see a sweep of a low, London low, no sweep. Let's keep going. The discount's gonna stretch down a little. Keep going. We're looking for an entry. There's no fair value gaps here. The only one in discount is going to be right there. Okay. Boom, right there we enter. Sell 1,000 shares, 2,000 shares. Let's go. Sell. And now, this is where being a good trader comes. Since we have a swing high that's near, and that's pretty crucial because we're using that to, that's like the reason why we're using this swing high is because that's literally what we're using to find out if this is truly discount. If it's not truly discount, then it's going to take out the swing high. It's going to invalidate the thesis. So, entered short, take profit. Stop loss is at swing high. Take profit 1 is going to be at London lows to match this. Okay, 1.5 to 1, not 0.5 to 1. Okay, let's go. Oh wait, let me place the stop loss. This trade took some time to hit, right? There we go. That would have been take profit 1. It was take profit 1 for me, and then I put my stops to break even. A little under break even actually. But yeah, how much time did it take to hit? We entered right there and exited right there. It took 32 minutes. So yeah, it was a pretty long trade. But yo, we were in drawdown for 1 minute maybe. 1 minute. That's how you know your thesis is right. You see, look, and I took my stop loss, and I that's what happens when you honor your stop loss. You see, I honored my stop loss. And look, it pays out sometimes. Sometimes it goes back down. Sometimes it does go back down. But we knew that it was at least going to hit London lows, because again, there usually won't be an SMT from like previous London lows, London high, Asia low, Asia high. It's generally used on like a swing high, like a regular swing high after a sweep of liquidity. It could work if it broke London low, and then we had this low, and then it went up, and then it went back down a little down to here, but the S&P created this low, went back up, went back down, but to here. So that would have been an SMT, and then it would have went up. Okay, let's stop focusing on SMTs. Alright, exited the trade right here. I had 5 put options, sorry. Exited 3 over here. And then I put my break, I put a little profit, like maybe 2% profit stop loss, which was like right around here. Or like right around here. And I got stopped out. I still made, I think it was like 15%. So I'm still chilling, yo. I'm chilling for a Monday. It's not too bad. Really though, we entered the trade right here. So, I mean, regardless, you would be getting stopped out whether you traded futures or options. But again, you guys want to see now? Look, you guys are gonna be mind blown. Remember when I was telling you that it doesn't matter about your trading strategy, it just matters that you know how the market moves, right? London low, crucial point. And please remember, guys, we still have this whole gap. So if you're watching this video on Monday or Tuesday, on Monday or Monday night or Tuesday morning, this gap is probably gonna fill, or if not fill, at least it's gonna hit like there, or a little bit higher. Where was it? I think on triple Q. Actually, no, yeah, right here. It should at least hit there. New York PM high of Thursday, I think it was. So yeah, as I was saying, London low. Took London lows, and this is also why you gotta watch all the indexes that line up, because, or at least a couple that line up, because the triple Qs didn't hit the low yet. Did not take the low here yet. So we wait for triple Q to hit the lows. This is if you're looking to enter long. My bias was not for longs. Okay. Okay. My bias was not to enter longs again, but this is if you wanted to enter long. Again, a lot of biases work, because why? Stock market moves up and down, guys. Stock market moves up and down. Doesn't just move up, doesn't just move down. Everybody can win, everybody can lose. Finally took London lows here. If you're an ICT trader, you see lows are taken. Pretty nice pool of liquidity. Again, because there's a huge gap. It's the first candle of London trading session. I guess you can say of the first day of a week. A lot of orders being put in, a lot of orders being sold. A lot of whatever that's technically still an order being put in, but okay. We see a pool of liquidity taken. Let's go to the 5-minute. Let's see if there's anything we could have taken here. Nothing really that I like. And again, I wouldn't take a trade here, because like, where are you going to target? New York AM highs. Could target here, but it's a long shot. And generally, you don't take a trade targeting New York AM high of the same day. That's like technically a continuation trade, I guess you can call it. I don't like taking that, because usually the risk to reward is very low. But ICT traders should not have taken a trade here. If you look at a 1-minute structure, you could technically call this a structure break of structure, but you gotta be an idiot to use 1-minute structure. Anyways, break of structure right here, you could say. Boom, we moved up. Another break of structure right here. Again, it's not really structure. It's a 1-minute, literally a 1-minute candle. This would have been terrible if you took this trade. Honestly, if you rode this, and you profited, you can go buy yourself some drinks or something, but you shouldn't be happy. Because again, it did not touch discount. It did not touch discount at all. Ever. Ever. It legit did not touch discount. Right now, it displaced a lot to the upside, broke this structure, which this is pretty big. It could go back down into discount. Right here wouldn't be a bad entry, but I don't see why the hell you would. I honestly, this is a pretty good trade. It's not a bad trade at all, actually, because these are stacked highs. 1, 2, 3, and remember, guys, there was a lot of chop here, and this was right before a dump. So this is technically a pretty big liquidity pool. That's a pretty big liquidity pool. So this wouldn't have been a break of structure. You can't really consider that a break of structure, but right here there was a fair value gap that we based a short off of to hit a low. Right? So I think we can. Oh wait. So this is also you gotta literally look at everything, guys. Let's take a look at the big picture discount. What do you guys see? What do you guys see? Hmm? I see a retrace back into the discount. Definitely is possible to move up. Let's calculate our risk right here. If we entered right now, take profit up there. Stop loss would have to be over there. That's not bad. Let me try this. Triple Q. Okay, let's enter long. I'm gonna enter for tomorrow's expiration. And should I enter this? Trying to think here. Let's go with a 5. 5-minute, we did have a break of structure. Yeah, this is a good trade. Okay, let me take a few contracts. I'm not sizing big here, just because I'm not going to be home for this trade. But we did get filled right there. I'm just going to be honest with myself. I got filled right there. Stop loss is going to have to be at the swing low. Wherever we started our discount, Fibonacci, it's going to be right there. It's a pretty big risk. It's not. I don't like taking trades this risky, but it could definitely hit. Because again, if we technically, it technically could go both ways here. But as I was looking at the charts, I realized we had a 5-minute break of structure. So that usually pushes us to the upside. We took London low, a lot of displacement up. We inversed this big fair value gap, which I used to bias an entire trade off of. We're retracing into it right now. We're retracing into discount. We have another fair value gap right here, which is what we technically entered off of. Let me turn my magnet back on. The only thing I'm pissed about is I got a bad entry. I was trying to enter here, but I didn't have enough time to think about the trade. That's part of being a trader. Okay, this is an inverse fair value gap. This is a regular fair value gap. We're now retracing into discount, so this is where more traders are getting in, or we're going to find out if more traders are getting in here. Sorry, I'm just trying to fix this. I moved it by accident. Okay. Generally on Mondays, I don't even like taking so many trades, but I guess we'll see. We will see over here if it was a good trade or not. This fair value gap, ideally, should have been reversed. It was just filled. And again, I sized light in this because I didn't have so much conviction in it. Don't get me wrong, it definitely could go right. I definitely think, obviously because I entered it, I think it will. But it's not like one of those trades where I'm gonna put 5 bands in it and because like I know it's gonna go up. Like that's like this. But this one I didn't size so heavy also because it's Monday. Yeah, we're gonna let this one ride out a little. I gotta head out. I'm gonna update you guys tonight. I'm gonna review this. I'm gonna go on replay, review it with you guys, teach you guys what went right, if it went right, what went wrong, if it went wrong. I don't care. Profit is part of the game. Losses are part of the game. Remember that, guys. Okay. Keep in mind, this was the break of structure right here. Very important break of structure. We're now tapped into discount of the shorter range, and we also tapped into for the shorter bullish range, and then we also tapped into the discount of the long-term bearish range. But we're trying to prove the long-term bearish range wrong because we already took the liquidity pool that it kind of wanted to take. The other liquidity pool is pretty far away. Definitely could happen, but the odds are stronger of it going up to take out these liquidities, hit the equal highs, maybe then form an SMT, and then in New York PM session it'll maybe retrace back. But I think it's just going to chop after it takes out these highs. Alright guys, peace. See you guys tonight. I'm going to edit this video a little, take out some parts, and then I'll add tonight's part to it, and I'll see you guys soon. Stay disciplined. Alright, back. It's a little late, but let's do a quick recap of what I pretty much left off with. So I left it around 12:10. Let's use replay. Alright, so remember, we swept the low. I took this short right here. Solid trade, made a little bit, was a good risk to reward. And then let's go to the next candle. We see it swept the low, made a high. We have a new swing low and swing high, and we can see here that there is more room to the downside, yeah, but I didn't think it was going to be taken today because this is a gap. It's pretty much a gap, pretty much only a gap, I mean, and this isn't really liquidity anymore because technically it got all swept as it was moving up here. So we do have a gap. It is technically an imbalance, but again, it's not so strong. Like you'll see right here, there's a gap. There's a gap somewhere here, right here. There's a gap here too. You can't really use that as a bias, because if you did, you would have been cooked for like a week. Okay, let's get into the trade. So we see right here, my bias is bullish going into this trade. It was bearish over here until we swept London low. We took London lows, and now I really didn't want to trade anymore for the day, especially because tomorrow is literally Veterans Day. But I saw a nice displacement to the upside. We had right here break of structure. Beautiful break of structure, by the way. This is literally the leg that brought it down to sweep London low. Broke structure with this candle, and since this candle I was looking to enter long. Alright, you guys can see in the first half of the video. Okay, let's speed things up a bit. So right here we see, let me just redraw it for you guys, make it a little simpler. Swing high to swing low. Right here is the discount. So you could technically, if you still had a short bias, you would want it to tap into discount, hit this fair value gap, which it did perfectly, literally into the 0.5 of the fair value gap, and then you would want a 1 minute break of structure to the downside, which we didn't really get. I would ideally look for a higher swing and then to break that. Okay, so I would, if I were to enter short, I didn't have a short bias anymore, but I would wait for the break of this and then retest and then back down. That's how you mitigate your losses as much as possible. So let me go back a little bit because I already entered the trade here. So I didn't have a short bias, I had a long bias. So I was looking for this, or this area, I was looking for this discount to get invalidated, meaning once this 5 minute fair value gap gets inverse, that pretty much invalidates the fact that it's a bearish bias, and it brings us to a bullish bias. Alright, so I saw, let me redraw this also. Since I had a bullish bias for this trade, go from the swing low to the swing high, and we see that this is our discount right here. Did I enter on the 5 minute? I think I did. Yeah. Okay, so 5-minute fair value gap right here in discount. Let's go on the 1 minute so we can get the entry. And then right here we can also see this was the fair value gap I used to enter shorts right here. Entered short, boom, took profit, and we inversed it on the way up. So this was like a valid fair value gap because that was we made a successful trade off that fair value gap. So let's remove that now that it's inversed, and we are looking for. So I entered on the 1 minute. I didn't wait for it to hit down here. That's too deep into discount. I think it may have hit that, but I didn't. I usually don't go that low. So I entered on the 1 minute right here. Again, break of structure, displacement to the upside, tapped into discount, into a fair value gap that was built with a candle that was in discount. Entered right there. I literally entered right here. I think I got a little bit of a bad entry actually. I remember from the video. I entered like right there, let's say. Let's buy 100, let's buy 500 shares. And then I definitely got a better entry. I think I got in like over here. But whatever, it's a matter of 20 cents. Stop loss was there. Take profit was, it was there, but TP1 is there. So that's a 1.24 to 1. Again, that's, I was saying in the first half of the video, I don't like taking this big of a risk. But I took it because I did feel pretty good about this trade, honestly. So let's go. Boom, boom, boom. You see, so it did tap into the 5-minute fair value gap. But I didn't enter there. I entered like literally right here. Okay, this fair value gap is holding. Let's keep going, keep going, keep going. This was that 5-minute fair value gap. Let's see it get inversed. Boom, inversed. This was so annoying to hold. I remember I was on the way to work, or I was at work actually, I think. No, I was on the way. And looking at my phone, I'm like, bro, it's been like 40 minutes, dog. Literally, I got in the trade at 12:10. And it's still 12:45. It was moving so slow, so slow. Again, that's why I said I hate looking at charts. Like, I hate looking at it for so long. I don't even know why I'm making this video. Gives you really looking at the charts for a while gives you analysis paralysis, and that's the last thing you want. Okay, take profit 1 is here. Let's just put a buy. Let's put a sell order. Let's edit that to a little over half. Confirm. Let's go. Okay, and then final take profit was right here. I think I ended up taking it like over here because it was moving like, bro, look at how slow this was moving. I got in right here. I've been in the trade for 45 minutes and I wasn't even by my computer, so like I wanted to make sure I didn't miss anything. Usually when you're on a computer you can look at a 15-minute, 5-minute, make sure your bias is still intact, but it was clearly up. I mean, this is like one of those things you could put in like a million contracts and it'll hit. It's like free money. But then that's stupid. Okay, ride it. Took so long. So long. Right there, it took profit. Legit 2-hour trade almost. Final take profit was at a risk to reward of about 1.6 to 1. Definitely a good trade. There's the recap that I promised you guys. Let's clear up the charts now. Beautiful. Love empty charts. Okay, that's it, guys. Appreciate it if you can leave a like, subscribe, comment, do all that. Subscribe to follow my Instagram. Same thing as my YouTube handle. Follow that. I post stories. I'm gonna be I post P&L there. I dropped value there. I mean, you guys got crazy value in this video. I'm gonna keep posting videos, hopefully. Got any questions? Comment, DM me on Instagram. No courses, no groups. I'm not here to alert trades. I'm here to teach. Peace out, guys.